Ladies and gentlemen, boys and girls, welcome. Welcome to the start of the rate cutting cycle. Welcome everybody to the daily recap show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks were mixed on Wednesday after the Federal Reserve ushered in the first US interest rate cut of 2025. Fed officials voted in favor of a 25 basis point rate reduction, a move highly anticipated by the market following the central bank's two-day policy meeting. And actually, stocks were broadly green today. It was really just weakness in a lot of the mega caps. You can see Google was down 1.2% along with Meta, and that held communication services down. Nvidia was down 2.7% on news from China. We'll talk about it. And AVGO, as a result, also fell 4%. Palantir and Oracle were both down roughly 3%. Uber was down 4.9%. And then Amazon and Tesla for the consumer discretionary space were down 0.7 and 1.34% respectively. However, every other sector gained. It was a strong market breadth through and through following the Fed's rate cut. You can see we got a lot of volatility after Jerome Powell announced the rate cut. Stocks were up, stocks were down, but the majority of sectors actually gaining for the day. You can actually see here the RTY outperforming the S&P 500 and also outperforming gold. Very interesting to see gold actually down here on the day, but there was a lot of volatility. At one point, the RTY was up as much as 2.5%. Absolutely insane volatility, and do expect much of the same. This is the type of stuff you get on the events, but we'll talk about the FOMC a little bit later on. You can see that growth really took a hit along with large caps, especially in the growth and core space. Mid cap growth was down 0.22%. Small cap growth was virtually flat, although ever so slightly in the red, down 0.03%. Every other factor and size segment was green. Value in core in small caps and mid caps, and then large cap value was up 0.45%. So again, what we really saw was a rotation out of growth into the broad market, and that is healthy, and that's what you would expect when we do get rate cuts. Globally, things were actually roughly the same. We saw quite a bit of strength here in Asia. Europe was mixed. North America was very red. South America was actually green. Just a mixed day through and through, coming on the back of rate cuts. The Fed cut rates by 25 basis points. They also signaled that they would cut a further 50 basis points worth of cuts, and this was due to the Fed economic projections. We got those today. So we're looking at 25 basis points worth of cuts for the next two Fed. And Jerome Powell came out and said a whole bunch of things at his press conference. He said that he has begun, or the committee has begun, to see goods prices come through with high inflation. He said there are still material risks to the employment market, and those risks have risen. And that's part of the reason why they did go ahead and cut rates. The Fed chair also reiterated that the base case is that the tariff impacts will result in a one-time price jump, and inflation should not remain persistent, especially given a weaker labor market, and the Fed's balance sheet runoff will remain the same as it has been over the last couple of months. So long story short, I would say a fairly dovish to neutral Powell coming with some rate cuts. This is exactly what the market expected, and I think any volatility we do get simply buy that dip, especially in mid caps and small caps, definitely seeing outperformance and broad market outperformance. And that's actually what you need to keep the bull market alive. There was also some other news today. China banned tech firms from buying nvidia chips. Now, this is ahead of the US-China trade negotiations, which is happening currently in Madrid. CEO Jensen Huang is expected to discuss the developments with the US President Donald Trump in London on Wednesday. So we'll see if a deal can come together. This is very likely a negotiating chip. Both the US and China are using NVIDIA as a negotiating tool. NVIDIA on the back of this news was down 3.5% at $168 per share. Oracle was also down 3.28%, but Oracle is really pairing some of the gains it's had in the last couple of weeks. But all in all, the semis have been really weighed back by NVIDIA, and both the US and China are using it as a tool to get what they want. Uber shares were also moving in the market today. They were down 5.43% after Waymo announced it would team up with its rival Lyft for its upcoming robotaxi expansion in Nashville. Lyft, as a result, was up 13% on the back of this news. And then for everything we saw today, there were 4,500 advances, guys. Look at this. Absolutely crazy. Market breadth insane. Only 1,700 decliners. We saw net outflows in both the Nasdaq and the New York Stock Exchange. The S&P 500 largely flat today, but again, a lot of volatility, as you can see right here. And market momentum continues to remain robust. We saw great improvements in the 5-day, and we're still above the 50% mark here in the month of September. You think we would have lost these already given seasonality? That is not the case. And ultimately, guys, if we do get any dips, buy those dips, because market breadth, market momentum, and market flows continue to remain in favor of the bulls. Now, the market is still open, just letting you guys know. And as it is right now, the S&P 500 after those rate cuts are largely flat on the day. If you were on Twitter, the consensus was we were going to get a sell the news event. Maybe we did get that in the Nasdaq 100, but when you look at the RTY, the RSP, mid caps, small caps, when you look at value over growth, what we're really seeing is less of a sell the news event and more of a dip buying event. Although we are seeing a little bit of market weakness here into the end of the day, I do think that's going to continue. To be aware, the market is still open here, guys. I'm just recording this a little bit earlier than usual. International stocks were roughly mixed as well. You could see European stocks were flat. Middle Eastern stocks fell a lot. China stocks were absolutely rallying today. I mean, Baba was on fire in the China session, up 2.53%, and then India stocks up 0.5 percentage point. Red cuts didn't really help the crypto market, down 0.5 percentage point today, down 1% in Bitcoin and Ethereum, guys, you can see, but still holding key levels. You can actually see, look at the 2-year and 10-year yield actually rising on the back of Fed cuts. Very, very interesting trade. Volatility was down 5.62%. The DXY gained ever so slightly. You can see bonds fell, and then gold was down 1%, silver down 2.56%. So it does look like the market had priced in a 25 basis point worth of rate cut looking ahead. In fact, maybe the market overpriced in the rate cuts of 100 basis points because the Fed only said we're going to do 75 basis points this year. However, we don't know what 2026 is going to look like. The economic projections do get a bit hazy. We like to take things as they come, a quarter at the time. So I think you might see the 2-year yield rise ever so slightly because the market had priced in 100 basis points worth of rate cuts. So that's probably why the 2-year and 10-year yield are rising. But we are seeing a little bit of weakness here in the S&P 500. You can see the weekly chart still looks very, very strong. Higher highs, higher lows into an intraday all-time high here for the S&P 500. When we hop on the daily chart, you see quite a lot of volatility here on the day. One of the most volatile days we've had going back to early September, as you can see right here. However, still trading roughly flat on the day, slightly down, but inconsequential when you actually look at the trend where we are right now. Ultimately, guys, if we do get a dip buying opportunity, if the market continues to sell off on the back of this news, let's just say that happens, this is where we would buy the dip, the 63.50 area. This is ultimately where we want to be dip buyers right here, looking for a move to the upside. If we do get here and we do break below to the 6,200 area, then we'll talk about what happens here. But let's take it one step at a time. And right now, we're looking for a move to the 63.50 area. Otherwise, we will continue this trend, which is onward and upward, making all-time highs, as you can see in the market. So, look, if we do get a pullback, this is a dip buying opportunity. Otherwise, you definitely want exposure in this market. We're officially in a rate cutting cycle. And generally speaking, when you look 12 months ahead, the S&P 500 after its first rate cut is up about 12%. And in fact, that's on average. When you look at the returns where there is no recession, S&P 500 is up closer to 18%, nearly a 20% gain. So you want to stay long, you want exposure, and any volatility we do get in this market is simply a gift. Now, looking at the Nasdaq 100, we can see roughly the same type of price action. We've seen a little bit of sell-off here after the initial FOMC, but dip buyers are suddenly coming in. Look at this wick as you see it right here. If we just actually go to the one-day chart, you can see that we did get, steady selling into Jerome Powell's speech. He said good morning right here. Volatility ensued to the upside, to the downside. We could see, however, the bulls coming in, buying the $24,000 dip right on the 24,000 mark. And right now we're sitting at 24,200. And we may actually see a positive Nasdaq. We'll see how the day turns out. But all in all, is seeing volatility through and through the markets with definite outperformance coming from things like the Russell 2000, the RSP, and you could see a lot of volatility, a new 52-week intraday high here for the Russell 2000. I'm sure it's the same for the RSP. Almost, we call it an equal high, I guess, to mid caps as well. Yeah, you could call it an equal high with real outperformance coming from the Russell 2000. So these high beta names, you think that we would see equal performance in the Russell 2? You think because high betas outperformance, you think you'd see because high betas outperforming, you'd see crypto outperforming, but Bitcoin is down about 1.1% on the back of this news, but still holding the top end of the $115,000 range. Ethereum down half a percentage point, but still well above the 4,000 level. Ultimately, I do think the move here is for us to continue to move higher to the upside in crypto. You do know that liquidity will be abundant after these rate cuts. And that's ultimately the only thing that crypto cares about is just liquidity in the market that's going to drive flows. The DXY is actually up 0.2% today. Many people thought that you actually sell the dollar on the back of this news. That is simply not the case. And I do think we probably have found a low here for the DXY. I do think we probably will go higher, maybe to the 98, potentially as high as the $100 mark from the 96 range where we are. I think we are going to see a little bit of strength in the dollar through and through. And like I said before, it looks like the market was overpricing the amount of rates. We're going to get the market one at 100. The Fed came in with 75. So you could say it's a bit of a miss against the 2-year yield expectation. However, the fact that the market is kind of flat is really telling you everything you need to know, that the market by and large priced everything the way they should have. I mean, yes, the Nasdaq is slightly down 0.3%, but you are seeing a movement in stuff like the Russell, the RSP, mid caps, etc. Again, on a relative basis. And all in all, guys, I think the rate cut developments looking 12 months out, this is largely positive crypto, small caps, and just equity markets as a whole. And you ultimately want to be long here in this market. I think if you are looking at certain names, I think a great name to buy is Lyft. If we do get a pullback, this is actually a name I gave you guys at about the $16 mark. I said Lyft is definitely a name you want to buy. Look at where we are right now, and I do think it's going higher. This is without question a $30 stock. And for the record, right here, even at $22 a share, this is still trading at 12 times our forward free cash flow. Very, very cheap name compared to Uber, which is trading at about 30 times, right? So if you ultimately are looking for multiple expansion and earnings growth, Lyft is one way to play. Another name that I actually do like is BMNR. I've been doing a lot of research into this name, and I do think if you can get BMNR, right, at the $50 mark, sort of right here, I just sold $50 cash secured puts for BMNR. If you can get this at the $50 mark, I do think we resolve significantly higher in 2026. It's definitely a play on Ethereum. And another name of the mega caps that I do like is actually Google. Now, it is trading at all-time highs, but the valuation is not rich at all. I think it still trades at about 25 times earnings. This is easily a 30 plus times multiple stock. And I do think we do go high. And if we do continue to get a little bit of weakness here in the name, we want to be buyers of Google, looking for a $300 price tag sometime in 2026.
Guys, and diving into sentiment, this is the fear and greed index, and we continue to remain in this neutral zone, closer to greed, but still in neutral, telling us the market is not euphoric, we're not overheated, the market is simply chugging along, neither in risk on or a risk off market. However, when we look at seasonality compared to what we typically see in September, we probably are seeing somewhat of a risk-on environment here in 2025. We are somewhat bucking the seasonal trend, simply moving higher. However, anything can happen in the last 2 to 3 weeks, especially towards the end of September, where we see the majority of declines. Now, you don't want to look at the level, right? You want to look at the path. And right now, the path is signaling that we probably go sideways for the next week or so, and then we actually trade lower into the end of September. However, a big question everybody is asking right now is, are we in a bubble? And when we look at the facts, when we look at information technology investment levels, they still remain well below what we saw during the dot-com era, telling us that we're not really in a bubble right now. And when we also look at margins are essentially double what they were in 2000 versus 2020. And that is telling us a lot. You have businesses that are 2 times as profitable, investing significantly less, growing earnings at a double-digit clip. We're looking at 14% earnings growth for Q2 2025, this most recent quarter. That is the reason why stocks continue to move higher. And if we maintain at these margins, these earnings, and if capital expenditure continues to be high, but not exceptionally high, I think stocks move higher especially into 2026. And when we look at the macro, GDP for Q3 sitting above 3%, that's solid. The unemployment rate, yes, is moving higher. Non-farms is moving lower, but growth is still remaining robust. And this is telling us the productivity is making up the difference for us to go ahead and get that 3% GDP mark for the quarter. However, guys, you do need to be aware of the risks, and there is an uncomfortably high 48% probability that the US economy will suffer a recession in the next 12 months. It's less than 50%, but historically, the probability has never gotten this high when a recession has not ensued. So be prepared for volatility. And if we are going to enter a recession or a period of sustained economic contraction over 2 quarters or more, you're going to hear it first on this channel. Now, guys, we do need to pay attention to the data. Tomorrow, we get building permits, housing starts. Now, we're looking for a 1.37 million in building permits, 1.38 million in housing starts. And then it is the FOMC, the all-round Fed decision. We are looking for a 25 basis point rate cut. That is what the market is pricing in. I'm going to assume we're going to have hawkish commentary, but that's all but priced in for the market right now. And ultimately what the market is going to look at is forward commentary expectations, essentially the Fed's or Jerome Powell's guidance for future rate cuts. If we get what the market is expecting, and that is 25 more basis point cuts for the next 3 meetings or through the end of the year, I think the market will move higher on the back of that. If we get a 50 basis point rate cut tomorrow, we will sell off, in my opinion. Earnings tomorrow, we have General Mills, ticker symbol GIS, and that's it. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.